Hi, this is Vikas Gupta taking you through the Bharatiya Business Simulation briefing. Simulation is prevalent in a lot of sectors all across the world. It's been around us for quite some time. For example, pilots are trained in a simulated environment before they are handed over the plane. So are the soldiers trained in the war games. And we all know that business is very complicated. And every day we are taking decisions, and it's very confusing to take certain decisions. So, business simulation help you in taking those decisions because it sets up in a risk-free environment. So we give you a workshop structure, which workshop structure you have a CEO, COO, operating officer, chief financial officer, and chief marketing officer. CEO is the leader of the group and will have the final say in what to be done in the company. You have been handed over a large company as a multi-million-dollar company set up at the same level for all the participating teams. The system has been set up in a perfectly competitive environment and you will not be able to monopolize the market. The way we're going to interact with each other is through this Excel sheet. You're going to enter the decisions in the Excel sheet, which is your decision sheet, and you'll be handed over a report based on the decisions that you have taken as well as the decisions taken by your competitors. Your ultimate goal is to maximize your profitability of your company, and the team who has the maximum cumulative profit after tax at the end of the round will be declared the winner in the group. Let me take you quickly to the case study over here. As you already know that the consumer electronic industry is what we are playing on today, and the kind of products that you are working on is a color TV, a flat panel display, fridge, and split air conditioner. These are the four products your company is offering as of now. Out of these, color TV, fridge, and split air conditioner is what your company is selling as of now. For more details, refer your case study documents to come up with the characteristics of all these four products. These are the different variables that will be in play while you are into a game. Let me take you through the report, which is the base report constitutes of the dashboard, financial statements, demand forecast, biz repo, and biz intel. Let us go in more detail what these reports are all about. This is the base report that will be given to you, giving you the performance of your company at the end of the round. This is the same report which has been given to all the teams. Let me quickly take you through this. This first tab is about the dashboard, where you could see that this is the file that you have to download, or it's already put it on your desktop. This first dashboard gives you the information about your competitors. You can see all the competitors' winning criteria is mentioned over here. So as you can see that this is the starting point, and all of the teams have the same company at the same level. Next tab is the financial statement. Financial statements gives you the main three pillars of your company, which is the balance sheet, income statement, and cash statement. Balance sheet talks about the asset and liability side of your company. Income statement tells you about how much revenue that you have earned and how much expenditure that you have incurred in getting that revenue. You're going to deduct the expenditure from the revenue and you will get the gross profit. Cash statement is the simplest of all. It just gives you the information about how much money that you are paying and how much money that you are receiving. Demand forecast is the third tab, which gives you information about the forecasted demand per team. I think we missed that. Let me go back to that. Where is that? So, demand forecast gives you the information about how much is the product forecast expected per team. For example, if you look at this 7,500 is the color TV demand in quarter 1. This is quarter 1. 7,500 is the expected average demand per team. So if there are 10 players in the group, that means the expected demand in the industry is 75,000. You can capture others share also, and others can also capture your share. So you have to be very careful about this. Gives you a good idea that how much you should be producing. If you look at the biz repo, it gives you the information about the finished products and the raw material. How much is the raw material that you are buying will be coming over here, and how much is the finished products that you are manufacturing will be coming over here. And if there is any kind of a loan that you are taking, that will be listed under over here. The last tab is about the business intel, which gives you the information about your competitors. But to start off with, on the top is how much is the asset that you have that help you to produce in the company. For example, right now you have 25,000 units of plant and machinery that you are capable of using in producing as of now. And if you move forward, look down, and you can see that you will be able to know that what kind of asset, how much is the asset each company has it as of now, and also the pricing of each company vis-a-vis their market share based on the pricing they have done. This is the decision form, the one that you will be using to input your decisions and handing it over to us. This is the way only we're going to interact. And let's go to now in more detail what the BIS facts tells you about. There are two kind of costs that you have to look at. One is the variable cost, the other one is a fixed cost. In total, that makes it the manufacturing cost. As you all know, that business simulation is a hypothetical situation that we have created, and among the variable costs, what you should be looking at is the raw material is one of the variables, manpower and warehousing. That all constitutes makes it a variable cost. In the variable cost of raw material, you will see that 1 unit of color TV will require $140 worth of raw material. For fridge, you require $280 worth of raw material, and AC for the manufacturing of 1 unit of AC, you require $360 worth of raw material, and you have to make the payment 100% in the same quarter. So let's look at what your company has done at the end of the round 0. This is your box that you should be looking at, the BIS repo. Let's look at this box first. So as you can see that your company has manufactured 7,000 units of color TV, 3,000 units of fridge, and 1,500 units of AC. If that is the case, then you know that what is the total cost of your raw material. If you just multiply it, and you will come up with this number of 23,60,000 is what your company has purchased and what you have consumed in manufacturing 7,000, 3,000 and 1,500 units. So over here, whatever that you have purchased is a cash outflow, and whatever that you have consumed is your expenditure. So since you have to pay 100% of your purchases, cash outflow will be 100% 23,60,000. Consumption is exactly the same, is 23,60,000, and any closing stock, what is the leftovers, which is going to be a closing inventory, if there is one, will go to your closing stock under your balance sheet. Moving to the next sheet, which is income statement. As if you look at your financial statement, under the income statement, you will see that what is the expenditure that your company has incurred of 23,60,000, and if you look at the cash outflow, 23,60,000 is what your company has purchased to buy that raw material. So this is about the raw material. Coming to the manpower, as of now, it's been set up that color TV will, for the production of 1 unit of color TV, required the cost of the labor that will be used will be $10. FPD, fridge and AC will be twice of the labor cost what you have incurred for color TV. So it's $10, it will be $20, and the payment will be 100% in the same quarter. Let's again look at the production numbers of your company of your last round. These are the numbers, as you may be aware, and what your company has to pay for it is 7,000 into 10, 3,000 into 20, and 1,500 into 20 is a total manpower cost of 1,60,000 is what your company has incurred in doing this kind of production. And if you look at, since you have to pay 100%, you could see that 100% is the manpower cost over here, and your expenditure of 1,60,000 also coming under the income statement. Looking at the warehousing cost, where the warehousing cost, if there is any of the raw material will be nil actually over here. Any of the finished products which you are not able to sell at the end of the round will be stored in your warehousing, and you have to pay a cost for that. So per unit storage warehousing cost is $10, and again you have to pay 100% payment in the same quarter. Right now your closing stock of color TV is 20,000, and again your warehousing cost will come out to be 2 lakhs. If you look at your income statement again, the warehousing expenditure is coming over here and your cash outflow of 2 lakhs is coming over here. Now if I give you this hypothetical condition where you are manufacturing 6,000 units of color TV, 3,000 units of fridge and 2,000 units of AC, and you have a closing inventory of 1,000 units. My question will be, what will be the total variable cost? And I'll give you the answer for that in the next slide, but you can pause it over here and test your acumen here before going to the next slide, or you can check your calculations over here. As you can see, these are the material costs, these are manpower costs. You simply add it up and the total variable cost for this kind of production is 25,70,000. Moving to the next section, which is about the fixed cost, which covers the facility overhead cost and the depreciation, which constitutes the fixed cost. Fixed cost, as the name suggests, is fixed in nature. No matter what, you have to incur these costs. For example, the facility overhead cost, the cost is 1 lakh and 100% of the payment in the same quarter. You can see the expenditure over here as 1 lakh in the facility overheads and the cash outflow of 1 lakh. Similarly, if we are looking at the plant and machinery cost, again all this information is given in your case study document. You can refer to that. As of now, you have installed plant and machinery capacity of 25 sets, which is equivalent to 25,000 units. The asset life, that is the plant and machinery that you can utilize, is over the period of 10 quarters. Depreciation is going to happen over the period of 10 quarters. So per quarter depreciation will be 10%. Expansion cost, if you want to expand your capacity, you can do that. One set cost will cost you 1 lakh and will give you additional 1,000 units. You have to make a payment 100% in the same quarter. Installation time, it will take 1 quarter lag for it to come up. For example, if you install your plant and machinery in the current round, for example in quarter 1, it will come up in the beginning of quarter 2 and it will be ready for the production only in quarter 2. In quarter 1, you have to make a payment, and in quarter 2 that will be ready for the production, and only in quarter 2 it will start depreciating. We are saying that the capacity utilization is 100%. That means that none of it is under maintenance. You will be able to utilize it. If you want to look at it, what your capacity is, you refer your BIS Intel. And as of now, you have 25,000 capacity. Asset life, the cost is 1 lakh. So the total plant and machinery asset cost is 25 lakhs. 10% is a straight line method of depreciation. The depreciation is 2,50,000, and if you look at the expenditure side of it, this is your asset side on the balance sheet, and this is your income statement where your depreciation will be listed every round for utilizing your 25,000 units of plant and machinery, which is 25 lakhs. You have to look at, which is your fixed cost that you have to incur no matter what. Just want to add one thing over here, a little twist over here, that FPD, fridge and AC will require twice of the capacity that you have. For example, color TV, you require only 7,000 capacity will be utilized, whereas fridge and AC, or so is FPD, will take twice of what of production that you are doing. So your production is 11,500. However, the capacity that is utilized for making this kind of production is around 16,000. So just be very careful that FPD, fridge and AC will be taking twice of the capacity. Marketing cost, moving to the next variable of marketing, is we are using as a fixed cost over here, which is 50,000, and you have to make payment 100% in the same quarter. Again, look at your expenditure and the income statement and the cash statement, where the marketing expenditure that you have to pay in the current round. Cash collection, so far we have been talking about the payments that you have to make. Now a little bit about the collection, cash collection that you will be making. So whatever sales that you will be making, you will be getting 100% of that in the same round. So if your price is over here, that's what you are able to sell. Again, refer your biz repo, and 7,000 into 200 is your revenue that you'll be getting. 3,000 to 400 is the revenue. 550 into 1,500 is your revenue. The total revenue that you have received is 34,25,000, and so is the cash inflow. By the way, when we are talking about the cash statement, we're going to look at how much money that you have received and how much money that you have paid at the end of the round, how much money that is left out. About the financial details, the minimum cash balance that you will be required to maintain at the end of the round is 0. It cannot be negative. If you go to the negative, you will get an emergency loan interest, which is 40% per annum. That is 10% per round or per quarter. Emergency loan, you cannot escape it. The moment it goes to below 0, we will automatically give you emergency loan at a rate of 40%. Emergency loan, you don't have to pay it back because we will automatically take it back from you. However, if you have a surplus cash, you can deposit in a fixed deposit, earn an interest of 8% per annum or 2% per round per quarter. You will be charged corporate tax of 20%. Your equity shares outstanding is 7,50,000. The face value is of per share is $10. And these are the price bands within which you have to quote your prices. Anything below that or above that will not be accepted. Over here, there are certain things that you have to look at. For example, there is a capacity shortfall. What's going to happen if in case there is a capacity shortfall and you overestimated your capacity? For example, the actual production that you want to do, your capacity requirement, as you know that FPD requires twice of it, fridge requires twice of it, AC requires twice of it, and so you should be having 30,000 capacity. For example, at that point of time when you want to do this kind of production, you have only 25,000 units, that is as a capacity that you have. So what the system is going to do, the system is going to cut it down, the 9,000 production to 7,500, so that similarly FPD will be cut down from 6,000 to 5,000, and all the the pro rata will be cut down, so that the total actual capacity comes out to be 25,000. This will happen only in case of mistake, otherwise it will not impact you. Where to start from? Look at your demand. For example, it's 7,500. So if you have to do the production, make it 10,000. Don't make it 25,000 because there is less likelihood that you will be able to monopolize a market. So make it 10,000 or 12,000, not more than that, and enter it in your decisions how much production that you would like to do. You already have an inventory of color TV, so you should not be producing it. You should be selling it only. However, for fridge and AC, you have to produce it to sell it. Enter your pricing over here and submit it to us, and we will give you the report based on the decisions that you have taken and your competitors have taken. Look at the dashboard and you will be able to see how you fare vis-a-vis your competitors in the new report. These are the things that you have to look at. For example, unmet demand will not be redistributed. Any demand that any team has received but was not able to fulfill that demand will not get redistributed to other competitors. Also, even if your pricing is the lowest, does not mean the market will sell all of your products then come to the next pricing. So be very careful about that. Price volatility, if there is any major changes in your prices, say 25% up and down, market does not like it, so probably you may not get a good demand based on that. Market share is the percentage share of your total market, that is under this enter. If you look at the percentage share, that includes all of your sales of exports and contract sales as well. We have created a hypothetical situation, and that may vary from your perception. So be very careful, because a hypothetical situation, we want to see that how you will react in these kind of conditions, and not typically that may vary from the actual happening. So thank you very much for your time. I hope that you will have a great time going through this simulation. Thank you so much.